Welcome to Clarity, a podcast powered by the Thomson Reuters Institute. I'm Zach Warren, the Institute's Technology and Innovation Insights lead. In each episode, we dive deep into a single question from decision makers and thought leaders from legal, corporate, tax accounting and audit, and government communities. In today's episode, we discuss the big question: where are the EU sustainability reporting regulations on ESG going in 2025? Just over a month ago, the European Commission adopted a new package of proposals surrounding sustainability reporting, aimed at simplifying EU rules and boosting competitiveness. These first omnibus proposals cover a wide range of topics, including sustainability reporting requirements, sustainability due diligence, EU taxonomy, and carbon border adjustment mechanisms. But as with any regulatory changes, the devil is in the details. To help guide listeners through the latest on developments of the proposal regarding simplification of sustainability reporting regulations, Natalie Runyon of the TR Institute's Sustainability Resource Center sits down with Andreas Rasche, professor at Copenhagen Business School and associate dean for its full-time MBA program.
Hi, Andreas. Thank you so much for joining me on the Clarity podcast today, discussing the omnibus simplification package that the EU has proposed as it relates to sustainability reporting.
Thank you very much for having me, Natalie.
All right, so let's jump right into the questions here. So could you please summarize for our listeners an overview of the main elements of the omnibus simplification package and its impacts on some of the bigger parts of the EU's sustainability reporting as it relates to the Corporate Sustainability Reporting Directive and the Corporate Sustainability Due Diligence Directive?
Yes, of course, my pleasure. I can do that. Now, the omnibus simplification package by the European Commission is a proposal, and I think it's important to note that at this stage it is a proposal. It touches upon four different directives or regulations: the CSRD, the reporting regulation, the due diligence regulation, the so-called CSDDD, the EU taxonomy, which is a classification framework mostly used in sustainable finance, and CBAM, the carbon border adjustment mechanism. Let me just discuss the effects on the reporting, so the CSRD and the due diligence directive. For the CSRD, so the reporting legislation, I think one very important point is that they propose a delay. A delay for those companies that have not yet been in scope of this directive, but which would have come into scope of this directive for the first reports to be issued in 2026. So this will be delayed until financial year 27. And the reason for this, let me also explain this, is that they do not want that any companies now start reporting and then later on fall out of the directive because of the changes that are being made. Probably the biggest change that is being suggested is that the CSRD will face different scope criteria. And here they set the threshold from 250 employees to 1,000 employees. And this kind of pushes out around 80% of the companies that actually have been in scope of the CSRD. A lot of people view this as a very, very significant change. The EU argues the other kind of the remaining 40,000 companies, they can report voluntarily if they want to. They will provide a standard for that. But of course, this will be company specific. One further change with regard to the reporting directive is the so-called value chain cap. Larger companies will be limited in terms of what kind of information they can really request from smaller companies. So this will be limited and they need to follow the so-called voluntary SME standard, so not ask for any information that are beyond this standard. It is also important to say what has been kept. They did not touch, for instance, the double materiality principle, and I think this is very welcome that this has been preserved. On the due diligence side, I think probably the biggest change is that the upstream due diligence efforts in the future, they will be limited to tier one, so direct business partners. There is an exception in the proposal, and you also need to include indirect, so tier two and following business partners, if you receive plausible information that suggests that there's a risk of adverse human rights or environmental rights impact. How far and how to exactly assess this plausible information clause we will need to see. This is at the moment a little bit unclear. A second change regarding the due diligence directive is clearly around the monitoring advocacy of due diligence that has moved from 1 year to 5 years. So only every 5 years you kind of need to check the adequacy of the due diligence setup of your company. And also here some people kind of say, well, you know, that is quite a time, right? That 5 years in between. And then last point, let me just point out that the EU-wide civil liability regime that was attached to the due diligence regulation has been proposed to be scrapped. And also with this, the maximum penalties were deleted. This does not mean that there is no civil liability at all, but it has been pushed towards the national level within the EU. So the EU-wide civil liability, as it was originally contained in the due diligence directive, is proposed to be removed.
Thank you for elaborating on that. So you did mention at the outset that this was a proposal, and I know that there's going to be a timeline going on into 2025 as the year progresses of negotiations. So based on your knowledge, what are the latest developments of the negotiations to move the omnibus simplification proposal from the proposal status to the final draft? And what do the timelines look like for this process?
Yes. So in order to understand the timelines, I think we need to understand that the Commission under EU law makes a proposal which then kind of need to be dealt with by the European Parliament and the European Council as so-called co-legislators. And all three institutions in the end then kind of find an agreement, a compromise, which is often called a trilogue process, in which they then kind of enact the law. The latest news on the omnibus is that actually the omnibus has two proposals, legally speaking. The one is this kind of delay, the postponement. This is legally speaking separated from the actual changes that I was just talking about. And the postponement proposal will already be voted on in the European Parliament on April 1st. So they will treat this under the so-called urgent procedure because they need clarity as soon as possible, because businesses need clarity on this. As a business owner, of course, you need to know what is happening and whether you need to report in 2026. So we will see a vote on this on April 1st. To my knowledge, also the EU Council, the other co-legislator, will also vote on this in April. So we will probably see a decision on the postponement, on the delay part of the omnibus. We will see a decision until the summer. And then the individual nation states in Europe, they will have to transpose this into national legislation until 31st of December 2025. And this is simply legally speaking to avoid a situation that 1st of January 2026, any companies kind of come into scope that shouldn't be in scope. Then the full omnibus package, so everything that I just talked about before, this is then treated under the ordinary legal process in the European Parliament and Council. And this will probably take some time. My own estimation is probably we talk about mid-2026 here until we have really a final agreement on this. There are a number of process steps in between. What we are seeing in the Parliament right now, there was a debate, a very, very heated debate, by the way, not long ago in the European Parliament. And it is clear, of course, that the EPP, which is the party, the Conservative Party, center-right, they will need to look for partners in order to kind of vote this through. And the question will be where they find an alliance on this. They can seek for partners for an alliance with regard to the some of the parties in the center, the Social Democrats, the Greens, the Liberals, Renew, and form an alliance there. This would probably imply that some of the proposed changes will be taken back because the Social Democrats have made very, very clear that they disagree with quite a bit of these suggestions. If they seek an alliance with parties more on the right, then I think we can expect that the omnibus either goes through as it is, or that it might even be changed in the sense, that more radical suggestions even come in, because we know that the far right parties in the European Parliament, they really want very, very significant changes to these reporting and due diligence rules.
Well, thank you for elaborating on that. I want to transition to the reasons that advocates are supporting this omnibus package, and also the arguments for the critics of the omnibus simplification package. So let's start first with the advocates. Could you explain the reasons why advocates of the omnibus proposal are in need of simplifying? So, for example, I know one of the primary reasons that advocates for the omnibus package that they're using is because of the fact of the costs of compliance in the short term make it hard for EU-based companies to compete. How accurate is this, and what's your understanding of this reason as well as the others?
Well, I think the main reasons of the advocates have a lot to do actually with two blocks of arguments. The first block is we are overdoing things. We are what they always call over-reporting, right? We are gathering too much data, it's too complicated, and we need to kind of cut this down. And admittedly, let me also say this, I think there is some truth to this. In the first round of CSRD reports, we really saw very heavy reports with a lot of data in it. And of course, we can and should also simplify this. We also should look for kind of ways to align these different regulations much better, align methods much better, harmonize things. So I think on the over-reporting and lack of alignment, these are some well-taken points. Then, of course, the main argument, you mentioned it, is, of course, the compliance cost, the long-term cost that are there. And I think we should treat this argument in a very differentiated way, because we need to make ourselves aware that neither CSRD nor CSDDD, so the due diligence regulations, have been fully implemented yet. Actually, CSDDD has not been implemented at all. So essentially, we do not have reliable cost data on all of this. We have quite a bit of estimates, but estimates are estimates. And of course, we also need to say that these kind of compliance costs, they behave differently throughout time. You usually have more costs in the beginning. Once routines, best practices are established, these costs tend to go down. I must also say, I'm working at a business school. The final argument is, of course, that these cost savings are supposed to boost competitiveness. And I think the link between cost savings and competitiveness is one that we need to view with a lot of care. I don't think it is as easy to say kind of, look, we scrap sustainability reporting and competitiveness goes up. Competitiveness is a complicated construct. For instance, competitiveness depends on whether you have access to skilled labor, whether you are innovative, whether you have competitive suppliers. Cost is just one among many factors here. So I think we shouldn't get overexcited in terms of our hopes that slashing reporting and due diligence costs will suddenly make European companies a lot more competitive. I think it is important to view this in context. But these are the two big blocks, the over-reporting block and the compliance cost block, I think, that are there. And around this, you can, if you kind of want to visualize this a bit, there is the competitiveness argument, right? We want to make companies more competitive. And this, of course, is a political agenda. And it is an agenda, I think, which is rightly there because European companies indeed lack competitiveness in many areas.
Very, very interesting. And thank you for going into each one of those three buckets. Now let's talk about some of the reasons critics of the omnibus package are using. So I know, for example, some critics have argued, as I previously mentioned, and you elaborated on, the compliance costs. But a lot of times there's evidence that over time, compliance costs decrease over time, right? In addition, I know critics have made the argument that history shows that the perceived easy path in the short term, and I'm using easy path and with quotations there, with simplification could come with significant long-term costs and lost opportunities. So I'm wondering if you could also elaborate on these two reasons as well as any others that you've heard about.
Yes. So the kind of the critics of the proposal, of course, they indeed point out, compliance costs are always high in the first round because you have the setup costs, you don't have any routines, no best practices. Also, I think an important factor here is that CSRD in particular comes with a limited assurance, and the assurance providers also they have not really clear guidance yet. They're also trying to find their way. So in a sense, we are assessing a system that is not really set up yet, and I would be very careful with kind of using cost estimates that come out of such a kind of system, that is not fully set up yet. Then, of course, yes, cost decrease over time. I think that is something that we know. Also from other contexts, that the longer you do things, the more you can automate, you can bring in software, and things get smoother simply because the different players in the market play much better together. So in that sense, I think the critics have a point here. Another important aspect of the critics is that they say we need data internally also. If you want to reflect on your ESG risks, the data needs to come from somewhere. And recently I met with an auditor, and he said, well, look, I mean, if you manage CO2 emissions and you want to know whether you made any progress, how do you want to do that without measuring it, right? So you kind of need the data also to know for yourself whether you made progress on some of these sustainability goals. And of course, the reality is that quite a number of business partners, bigger companies also often demand this type of information. And that's why quite a number of the 80% of the companies that are likely out of scope for the CSRD, they will kind of keep on reporting under the voluntary regime because their business partners want this kind of data. And then there is, and you said it also in your questions, of course, the data needs that exist external of the organizations, of the companies. Investors want data, NGOs want data, and also, of course, to some degree, as I just said it, business partners want data. And I think this is very important to look at these data needs. Actually, the original CSRD proposal in 2020, or the legal text, I need to correct myself. The legal text from 2022 bases the justification of CSRD very much on the data gap that exists. That investors, for instance, want a lot of more data, and it is simply not there. And I think, this data gap hasn't gone away. We shouldn't fool ourselves. The data gap is still there, and we somehow need to kind of address this gap. So the external data needs, in order to steer the green transition, in order to know where we are going, they are a significant aspect here. And this is, of course, what critics say. Otherwise, we are flying blind. A lot of critics say that, we are flying blind without the data, so we need the data.
Got it. So I know you have a little bit of expertise in this space, having worked on it and taught students in the business school for quite some time. Which arguments for support or opposition are correct based on your expertise, and which ones, in your opinion, have the most momentum or potential for momentum?
Yes, I mean, I always try to view debates in a differentiated way, right? I try to avoid kind of just simple statements. So let me start by saying I think the advocates are right. We need simplification. I think that is important to state. It is clear we need simplification, and the proposal also in part delivers actually on that. So that is important to say, particularly, for instance, on the taxonomy. There are some good suggestions in there that actually also simplify. However, I think the omnibus proposal as it stands right now, and I think this is where the critics are right, goes too far. This is not just simplification, but it also rolls back these regulations significantly. Just think about it from a very simple perspective. In how far does postponing a regulation or throwing a company completely out of scope of a regulation really simplify anything? It doesn't simplify anything for a company. I mean, it moves it completely out of scope of the regulation, right? So in that sense, I think the critics have a good argument here. I also think the critics have an argument that the data needs are essential. We know that from many studies. We also know that kind of from investors. Investors have different opinions on that, so we shouldn't throw them all in one bucket. Some want more fine-grained data. Others kind of say we are okay with what we have. But I think it is important that this data need argument is an important argument. And I also think in the long run, this is an argument that will have momentum, because we cannot ignore these data needs. They are there, and we will need to fulfill them if we want to steer the green transition. And the European Commission always said we stick to the Green Deal goals. So if the Green Deal goals here are there, you need data in order to manage this process. And part of this data, of course, comes from companies. And for this, you need more than just data from 10,000 companies. So finally, let me say, of course, political momentum might, however, exist, of course, with the cost arguments, because that is a simple argument, right, that a lot of people are also quite receptive to. So politically speaking, the cost arguments can have momentum and can actually create a situation in which the omnibus, of course, is voted through. We don't know yet, but the cost argument resonates with many. I personally, as I said, have my doubts about this kind of direct causality between you have some cost savings here and competitiveness on the other side.
I really appreciate you addressing what aspects of the reasons for the advocates as well as the arguments for those who are opposed to the omnibus simplification package and talking about it in the way that you did. I want to come back to the timeline, because as of now, there were non-EU companies that were supposed to be working on through this year complying on January 1st, 2026, based on their 2025 reporting. And in many cases, companies have already, moved through major portions of compliance, such as the double materiality assessment. So based on your expertise and experience, what are your best suggestions that you can offer to companies to navigate this uncertainty as the omnibus proposal moves through the negotiation process into final status?
So I think companies, of course, they need to keep a close eye on the entire process. As I said, in April, there will be the votes on the kind of what the EU calls stop the clock part, so the delay part. So companies will know pretty soon, actually, whether the CSRD will be delayed, and hence whether they will be really out of scope for 26 and also 2027. So it's important for companies to really monitor this. But then I would say, if you have made an investment already, ask yourself, why do you report? And I think this purpose question, this why question, is a very important question, because you don't just report in order to meet kind of legal demands or to kind of minimize your legal risk. Reporting comes with a lot of benefits. I mean, it gives you information to manage your business better. And in that sense, I would say, even if kind of companies now come into a situation where they kind of might be out of scope of these directives in the future, I would always recommend what I would kind of maybe frame as a so-called CSRD light. Do the essentials. You don't need to do the full-blown CSRD assessment, but if you have set up your system and if you find it meaningful, cover the essentials. Do your double materiality analysis and kind of look into the most material risks, and share these, of course, along the value chain with business partners. Also keep in mind that a lot of employees, at the end of the day, they kind of react towards such kind of information. Employees increasingly, we know this from studies, they seek purpose. And often kind of the identification with the company becomes easier if employees kind of see, okay, my company actually is doing something in this area. My company is transparent. My company is accountable. So in that sense, I think it is not just something that you do for the law, but you do it mostly for the company to improve internal strategic decision making. And I think this is the right framework to go forward. And that's why I would always recommend ask the why question. Why do you report? And kind of try to discuss this within the company in order to find a good answer. And from there on, I think you can then design your response strategy.
Well, I think that's a great way to end this podcast episode, is really asking your companies asking themselves why are they reporting? And I really appreciate you taking the time today to share your expertise, talk about the details of the proposal, the arguments for supporters and advocates as well as critics, and really enjoyed having you on the show today. Thank you.
Thank you very much for having me, Natalie. I very much enjoyed that.
Thank you, Andreas and Natalie. An excellent discussion of both the calls for and against these changes. This is an area to follow in the coming months as we progress through that timeline toward the final draft. And while nothing is yet set in stone, I do find the call for grasping this data astute. A proactive stance is key to not only abiding by ultimate sustainability regulations, but being an organization that can help drive the future of green energy. Thank you as always for joining us for Clarity, powered by the Thomson Reuters Institute. You can follow or subscribe to this podcast on your favorite podcast platform, and don't forget to share with your colleagues and leave a 5-star review. For more data-driven analysis of today's professional services market and in-depth conversations with industry thought leaders, visit us online at thomsonreuters.com/institute. You can also follow us on LinkedIn under the Thomson Reuters Institute. Clarity is a production of Thomson Reuters, copyright Thomson Reuters 2025.